Hey Jim, you know them old sugar daddy. They be tricking, they tell them
I
girls.
said you can have whatever you like. I said you can have whatever you like. Yeah, stacks on deck, Patron on ice. But we can pop bottles all night, baby. You can have whatever you like. I said you can have whatever you like. Yeah, late night sex so wet and so tight. I gas up the jet for you tonight, and baby you can go wherever you like. I said you can go wherever you like. Yeah. Anytime you want to, pick up the telephone. You know it ain't nothing to drop a couple stacks on you. Want it, you can get it, my dear. $5 million home drop business, I swear. Yeah, I want your body, need your body. Long as you got me, you won't need nobody. You want it, I got it, go get it, I buy it. Tell mother broke nigga be quiet. Stacks on deck, Patron on ice. And we can pop bottles all night, baby. You can have whatever you like. I said you can have whatever you like. Yeah, late night sex so wet and so tight. I gas up the jet for you tonight, and baby you can go wherever you like. I said you can go wherever you like. Yeah, shout it.
Hey, it's Elaine. This is episode 342 of the Orange Pill Investor. And you can have your strike any way you like. You can have your Bitcoin any way you like. You can have your MicroStrategy any way you like. I put together a very rudimentary little kind of, it's not a flow chart. Is it a matrix? Anyway, back when I used to work in the lab, we used to have little charts, like if if one of your parents was O and the other one was A, and they passed you the A and the other one passed you the A overwrites the O, and you end up like A blood type. So I decided to put something a little bit together like that for strike, just to see what's going to happen if one goes up and the other one goes down, what kind of incentives there are to trade in or out of either one of those positions. Um, Not too much is happening with MicroStrategy. If I had jumped on here at like super early, I probably would have just immediately closed out some of my covered calls. But the price has recovered through the day. And I always like to start my videos with the MSTR chart green. But sadly, the one day was red at the time. The weekly was red. The monthly was red. So I had to like zoom all the way out to 3 months just to get green. Which is a little bit annoying, but for year to date, it's still up. And then, well, just looking at the 3 month, we are holding on for dear life with some higher lows. But man, if we crack 300, and it's probably all, probably all dependent on Bitcoin. If Bitcoin wants to do us dirty, then MSTR could be ugly for a little bit short term. Doesn't change the long term at all, which is why I don't buy I don't YOLO into weekly 14-day, 21-day, 28-day, 60-day, even 60-day long calls is a little bit too makes me a little bit too nervous. Um, I like to start selling mine off and rolling them once they get to 90. That's when they hit 90, I start eyeballing. Even if it's for a loss, I just say fuck it and roll out to 120, 150, 180 preferably. And just a quick note about, I saw some guy and he was saying that MicroStrategy should be a little bit more reactive, and instead of just out there at the ATM every week, just kind of striking while MNAV is high and maybe laying off when MNAV is low. And I guess that could have a little bit of a point, but Sailor announced today that they weren't hitting the ATM last week. And look, the price basically didn't do shit. So if it was the ATM that was suppressing the price and uh, cannibalizing the MNAV to the extent that people are fantasizing about it, every time every day that they wake up and their bags are not just going to the moon, they start looking for a scapegoat. So, why didn't we hit 375, 400, whatever? Why didn't we get this amazing pump last week when they were not at the ATM the whole time? I I think it would be a little bit naive to imagine that they could use the ATM and not have any downward selling pressure. But I think it just becomes the boogeyman for everybody who has a little bit too short of a time horizon. Um, like this guy was saying something about, oh yeah, the first 6 weeks of the ATM were great, but then the last 7 weeks have been shit. Like, yeah, but if if you're up 47% still for 3 months, like stocks go up and then they go down. March, we had all-time highs. The pre-split, it was 2000 a share, 1900, 2000, whatever. And then we got 6 or 7 months of chop, and we saw, basically $100 a share, 125, 115. We tested support 3 times, 50% drawdown from all-time highs. Like, that's supposed to happen. I think there might be a little. I don't know if people are giving Sailor too much credit. Like, the guy's a genius with this stuff, but, and he sets himself up to be able to pull as many levers as possible. But I think people just expect him to be able to create number go up technology that never goes down. And uh, I think they've clearly announced their strategy. They've clearly said that volatility is the product. So you can't get number go up without some number go down. So to the people who were like, "Oh, they should just not sell ATM if the price goes down too much," like, okay, maybe if it goes down 50% overnight, but it's got to go up and down. Otherwise, it's not volatile. And they lose a lot of these financial products and tools and levers at their disposal. So I feel bad if people are trading on short-term windows and getting wrecked, but at the same time, I get a little bit tired of the the blame being directed outwards instead of inward at the person who placed the trade. So I didn't mean to really get off on that tangent, that rant, but let me just check the chats real quick. What's up, cup holder? Paycheck comes Thursday, so sad. Oh, so you're afraid you might miss the dip? Rob says banger club, mixed vibes for earnings week. Hell yeah. Yeah, every once in a while I try to pull up something that applies to either the video that I'm talking about or just the mood. But then I was like, I was just, sometimes you get on YouTube music and it'll just take you in 10 different directions and you'll be like, oh shit, I haven't heard that song in 7 years or something. So I had to pull that one out of mothballs. Kevin says, I feel you. Mine's Wednesday. Maybe we'll get a double dip. What's up, Jeremy? Cup holder Punnett squares. That may be what they're called. We'll see. We'll double check when I show mine. Jeremy says excited for earnings. I am as well, but like, how did Jeff describe last earnings? It was like Michael Jordan in his prime or something like that. And but like we were the only ones that gave a shit. Like nothing happened, right? Wasn't it October 30th? Like it was just outlined, like the future was just so bright. And it was only what 3 weeks after that earnings call that we doubled up on the price. So, I don't know. Maybe it took the market a little time to digest what was happening. It took a little time for them to figure out what we kind of already knew. But what was it? Only like 6,000 people even attended the earnings call, which is wild. Like True North gets more gets more views than the frickin' earnings call. One of the guys I follow, cool guy, but he's more of a TradFi guy, and he puts out his things like, oh, all the stocks that he's watching for the week, everybody that has earnings and whatnot. And of course, I'm sure he covered Tesla last week, and then this week I looked at his screenshot, and it was all of the stuff that was all of the companies that were having earnings this week, and I'm like, MicroStrategy wasn't even in the list, and like all of these bullshit companies that I would not even give a second look. I would not waste 5 minutes of my time researching, and that's what like Yahoo Finance and all of, they're covering these tickers, and MSTR is getting no love. So I think we're still definitely early. You can see MicroStrategy getting a little bit of love on some of the finance channels, but I think we've got at least one or two insane rallies, 4x in 4 weeks type of things. I hope we get at least two. I'm betting we will either so the market is either going to figure out that MicroStrategy is going to get into the S&P 500. That will be one rally. Now that could happen separately, like maybe we'll get a Q1 earnings surprise, or maybe the market will start sniffing that out. Um, but if something like that happens along the side of a Bitcoin rally, like if we get a nice, so November Bitcoin in a month went up, is that 25%? So if we get a nice Bitcoin rally along with the market front running, MicroStrategy getting into the S&P 500, if we get a couple of these catalysts that just kind of like align, the stars align, and a couple of these things happen at the same time, we could get some nice fireworks, I think. So definitely optimistic that we haven't seen the top. So I'm betting I'm betting my entire stack on that being the case. So that doesn't mean I'm right, and it doesn't mean it's going to happen overnight, but I'm still bullish for 2025. Rob says US just announced a sovereign wealth fund. Okay, hadn't heard that. I'll have to be on the lookout. Howard, relaxing day to day, getting ready for Wednesday. Same. Keith, happy Monday. On a poor man's covered call with 4 leaps and 4 sold calls, if well over 100 net delta, do you have an opinion on selling another call? Okay, well, if you got 4 leaps and 4 calls, then you're basically maxed out. Oh, but well over 100 net delta. Okay, I think I see what you're saying. So you might have, yeah, I don't like that necessarily. You could take a look at the I don't know if you can do ratios on poor man's covered calls. Yeah, you could do. Hmm. Yeah, you know what? You could probably put in, I don't know if this would work. But if you put in, let's do December 26th. We'll do, let's just say they're super deep in the money. Let's do 200 strikes and 4 of them. And then if it's going to let me do 5. Covered calls at like the 500 strike. I've never tried to do a ratio like this on options profit calculator. Depending on how you structure it, it looks like it's probably okay. What you wouldn't want to see is red up here. We go all the way up to 1,000. Yeah. So what I don't know if you can, let me see if I can make this a little bigger. Okay. So I don't know if you can notice the color, but like the darker green. So the max profit is kind of like in this area here, up to around 500 or 600 a share. And then you can see that you start losing money. The green starts to get a little thinner, right? So your max profit at like 600 a share is going to be like 50, 60 grand over here at expiration. But because it's not that you're selling that 5th one naked, but it's less covered. You can see that it's you're starting to kind of like barely even make a profit here. So do I think it's like terribly dangerous? No. But especially with us kind of floundering, I personally wouldn't. I personally probably wouldn't do that until we see. Yeah, see, that 5th one is exposing you to infinite losses if something insane happened with the price. Do I think that we'd see 1,500 by March? Probably not. And if we, if we hit $1,000 a share in that meantime, you could probably close all of your positions and just take your ball and go home, I suppose. But if something insane happened, that 5th covered call is going to expose you to this red up here at some point, unless you were just super, super, super conservative with the strike. Like maybe you sold the 600 or the 750 or something. I don't know how much premium you could get way up there, but that might do it. That might turn all of this red green. But I would personally, if I was going to do something like that, I would wait until we get that move. Like if we get the move from 350 to 650, that might be, a decent time to add that last one in. Yeah, obviously I can't give financial advice, but these are the things that you need to look at. And so you need to decide if this big ass block of red up here is scary enough not to do it. That's how I'd make that decision. Kakabo says MSTR is green on the 1 day now. Awesome. See, Robinhood is a little weird. Like, they're including the pre-market, but when did we go? So 9:30. Yeah, this should be green, I suppose. Let me see if I. Okay, so it is green. Okay, so my screen was just lagging. Cool. That's always good news. Howard says, I love him to say what earnings would have been with the fair value. Yeah. And some people were saying, oh, Tesla went early. And I was super confused by that. Lee Winbush, I asked him about it because I saw him posting on that thread, and I guess maybe they only if you do it in Q4, you have to restate the past 4 quarters, so maybe it's not that big of a deal, but this is completely my personal opinion. I think Tesla needed to do that because they were probably I think they were they gonna have to report negative earnings without their Bitcoin? And so that might have been a little bit of, not really like trickery, but a little bit of, math, like magic with the math. Like, "Oh, you know what? Let's go ahead and book our Bitcoin profits so that we don't have to so that we don't have to, use the old accounting rules and go negative earnings in Q4." Um, and what happened to the price? I think it went up and then, came back down. I don't think really much happened, right? With earnings. Yeah, wasn't there like a little bit of an after hours pump and then kind of came crashing back down to earth again? I'm hoping Tesla's apologies to anybody who owns it right now, but I'm hoping that Tesla doesn't really go to the moon until MicroStrategy has its next moon, because I'm looking to sell some of my MicroStrategy options and pick up Tesla positions. So I'm hoping they don't moon at the same time. MicroStrategy up 570% for the year. Tesla is up 100% for the year. So you did great in either position. But my prayer to the market gods is to hold Tesla underwater and until I'm ready to diversify into one more position. But yeah, I just don't think MicroStrategy has that same need to do what Tesla did because MicroStrategy's been negative forever. And I haven't been as religious as watching every single Sailor interview, but there was one that I remember. I had the link way back in the day, and I don't remember it anymore. But I remember hearing him specifically say something about fair market value in Q1 of 2025. Um, I suppose they could surprise and do it in Q4, but I don't think they need to. It reminds me of when Sailor said something about he doesn't even mind when the short his stock anymore because they'll buy it when we want them to buy it. And I think they don't need a positive earnings like right away. I think they're probably fine with just doing it in Q1. Uh, the market figuring out that they're going to be in the S&P 500, and then Bitcoin will probably be in a nice rally, and just all of those things combined would be a nice little chemical reaction that could result in some good things. So I just don't know what the incentive for them doing it early would be. I'll be interested to see if they have any announcements specifically on their 21-21 plan. Like, hey, yeah, we know that we're nearing the end of our ATM hammering stage, and we're looking ahead towards the convertible bond and the preferred offering or whatever. It's going to be interesting if we get any insights along those lines, or if they have any cool graphs um, showing how effective the KPI yield was over the quarter and stuff like that. But yeah, I don't think the TradFi people are going to give a shit in Q4. Dude Face says, "Do you ever look at Max Payne on MicroStrategy to see where the market makers are pressuring the stock?" I don't. I I don't know. I guess if there was something tradable in there, but yeah, I wouldn't know what to do with the information anyway. So I really don't. All right, so let's take a look at this little chart. Pretty basic, but the combination of Strike and MicroStrategy's price, they're either going to both go up. Strike can go up, MicroStrategy can go down. Strike can go down, MicroStrategy can go up, or they can both go down. And I tried to think about what the incentives would be for investors that maybe either own both or want to take a position and are deciding which one to trade in or out of. And so if anytime that Strike goes up, so that's row 1 and 2, the dividend gets weaker. So I think it opened up at like $80, right, for the initial offering. And so that's like a 10% dividend for the year. It was originally 8% because they were offering it at 100. So somebody correct me if I ended up getting that wrong, but it doesn't even, the exact numbers don't really matter. The point is that since it's a fixed dividend, no matter what Strike's price is, it's not like a percent of the share price. If Strike starts trading at $1,000 a share in a month, then the dividend is just going to get weaker and weaker. It's going to be, kind of meaningless. Like, okay, I paid $1,000 for the stock, and you're going to give me $8. Like, big whoop. You know what I mean? So the incentive in either of these positions is that the dividend becomes a weaker part of an investor's, considering whether to buy the stock or not. And if they're both going up at a similar rate, there's going to be no incentive to convert to common shares because it's going to have to be basically, 10 times whatever the preferred stock is trading at. So initially, if you're buying it at $80, you really wouldn't want to convert until MSTR got to 800. But that's if Strike is still trading at 80, which is probably not going to be the case. Strike goes up to $100 a share. Now that 10-to-1 ratio means MicroStrategy has to hit 1,000. So like it's this moving target. And then that scenario is even more exaggerated if Strike is going up, but MicroStrategy is going down. Like there's no incentive at all to convert. That would just be financial suicide, right? But in both of these scenarios, if the strike price is going up, the levers that MicroStrategy can use is they can hit the preferred stock ATM instead of the common stock side of the ATM. And the common shareholders get pissed off about that a lot, right? They grumble and complain that their price isn't going up. But it's almost kind of like a weird win-win scenario because if Strike is going up, but they hit the ATM and they drive the price down, that just makes the dividend a stronger component to Strike's price, right? Strike goes up to 1,000. It's like, okay, the dividend becomes a very weak selling point, but they can use the ATM on the preferred side and to people who already own Strike, maybe that's annoying, but it's going to entice new buyers, right? Like if the strike price, let me just jump down to the fifth row. $8 dividend on $100 stock is 8%. But if the price of Strike went down to $1, that $8 a year is 800% dividend. So like there's kind of like a minimum floor that Strike can even trade at before the dividend just becomes such a strong selling point that no matter how much they use the preferred ATM, they kind of can't drive the share price below a certain floor, because then the dividend just becomes this insanely, enticing. Like, who wouldn't just put their entire portfolio, if Strike was trading for $1 a share? You know what I'm saying? The dividend would be insane. So there's just weird kind of perverse incentive with some of these levers that they can pull. Um, so yeah, Strike up, MicroStrategy up. There's going to be a decreased demand for the preferred because the dividend aspect is getting weaker. Um, Strike goes up, MicroStrategy goes down. Same scenarios with the dividend. It's not as enticing for the Strike, for people wanting to buy Strike. Um, but this one, in all of the cases where, except for this one, in this scenario, is the only one that I found where I could see a disincentive for using the preferred ATM. Right? If Strike's getting crapped on, their price is going down, and MicroStrategy is going up, that would probably be the only scenario that I see where they would have to take the ATM for the preferred off the table. But what's going to happen? The holders of the preferred stock can now convert to common because Strike's being held down and MicroStrategy's price is going up. So in this scenario, you're going to get a natural dilution to the common stock because the Strike holders are going to convert. So you're gonna get some extra common shareholders, dilution for the common stock, but it's only at a 10-to-1, 10 preferred to 1 common. So that dilution is not even that bad. And then by them doing that, it kind of reverses this trend. And not only that, the lower that Strike goes, the greater the dividend is a reward for buying it at this price. So yeah, that's that combo. And then the last one is if Strike and MicroStrategy are both down, the dividend incentive for Strike being at a low price is still strong. There's no incentive for the preferreds to convert to common because it's kind of the same situation when they're both going up at the same rate. If they're both going down at the same rate, then Strike's trading at $50 a share and MicroStrategy's at $250. It's like, okay, that doesn't make any sense. There's still incentive for people to buy Strike because it's cheaper in relation to the dividend price. You could even, I put a question mark here because I think you could still, in this scenario, even though the Strike was down, I still think you could probably hit the preferred ATM because of the floor for Strike, I think, is so high. Like at some price, the preferred just gets so valuable because of the dividend. Like it can only just go so low. So that's why I think that Strike being down and MicroStrategy being up is the only scenario that I see where they just would have to take the preferred ATM off the table. And I think because of this, like 3 out of 4 scenarios, Strike is going to be a good thing for the common stock shareholders. I think there's going to be a lot less room for them to complain about the ATM. And I think the preferred holders have a lot less to complain about with the ATM because they do have that dividend component to lean on. So We'll see. I won't be joining the irresponsibly long strike group if there ever is one. So this is definitely a biased scenario on my part. So it's going to be interesting to see how the strike holders react to MicroStrategy, at the ATM for the preferred stock side. Is there going to be as much bitterness on the strike side as the MSTR holders kind of have been? So it's going to be interesting to see how much the dividend kind of acts as a calming force, or how much of an incentive there really is on that dividend to kind of silence the complainers. All right. So this was just my initial thoughts of how I see different combinations of the prices going up and down, and then like what's MicroStrategy's next move based on either of these combinations. And yeah, let's check the chat to see if anybody's calling me an idiot yet. Buffalo says, if we have a large drop in interest rates, it may push investors into strike for a juicier yield. Yeah, absolutely. So what are the rates now? Rates like 4 or something. Yeah, if they were to drop to like 2, that would just be insane. And Mason had linked an interview with Luke. Is it Groman? And that one was pretty good. He outlined a future where he he envisioned, as far as I could tell, interest rates just coming way down, just because we can't afford. Uh, when I say we, I mean the United States can't afford to even pay the interest on the debt. So that was kind of always what I was kind of thinking too. Like, they can only have interest rates high for so long before we just can't make the payments. So we kind of have to just drop the interest rates down, call that a soft default if you want. But, the lower the interest rates get, this dividend becomes much more appetizing. And then Buffalo says the strike goes up from demand, weakening the yield, then strike ATM commences. Yeah, exactly. Patrick says Orange Pill Investor live stream during Q4. Live, and then like listening to the earnings call. Yeah, that would be hard to react to earnings, because if I'm reacting to it, then I guess we could chat about it. Discussing it in the chat would not be distracting, but I wouldn't want to be talking while they're talking. It's an interesting suggestion. I'll have to think about that. I may have to I may have to conserve my strength though, because I know we're doing True North on Wednesday after earnings. I think we might do it an hour early. It's usually at 7 p.m. Pacific. We might do it at 6. So if I'm on during the whole earnings call, I might be wiped out. I think I skipped something up here. Kakapo Coder says, by the way, does Max Payne take into account whether the option was sold or bought by the market maker? Seems like sold calls from us would be misrepresented for Max Payne price computation. Yeah, I don't know. Somebody knows the answer to that. Joe says, normally I try to sell covered calls on high IV green days. We've been waiting on the sidelines for one of those days for a while. Now I am not sure what's better, wait for better time to sell or just when shares are free regardless. What are your thoughts? Yeah. Before I saw Quant Bros 1, I was of the opinion that I was just after premium and I sold under every condition. Now, of course, I always preferred to sell under high implied vol conditions. And I've watched some of the TradFi wheel, cash secured put and covered call sellers. There's one guy, he's a little bit of exciting to watch. He's kind of it's kind of hype, but he calls it the juice when he sells covered calls. And he's like, I don't give a shit about the price. He just wants the juice. So all he cares about, boom. This is like 4% return on capital for 1 week. That's 500% for the year, 50 weeks. That's 4 times 50. No, 200% for the year. Yeah, and that's all he cares about. And that's kind of the way that I used to play it. But for this bull run, because I value the call-away value so much more, I am very reluctant to just have all of my positions covered at all times. So I have kind of started playing that green day, red day game as well. Let me switch over to the implied vol chart. Because even IV rank is getting a little bit, like IV rank is my favorite metric for tracking implied vol. But when you've got a spike to 226 vol in November, like you could get a spike to 160 and it doesn't even really register that high on the IV rank. So back when MicroStrategy was 400 a share, when was that? Just a couple of weeks ago, right? It crept up from 300 to 400 right here. Yeah. So this whole time, like I think IV rank barely cracked 50. And normally anything over 50 is decent, like covered call selling zone. And without this giant spike in the calculation, like this might have been a 70 IV rank. And that might have been like a much easier to see trade signal. But what did we get? We just had like, IV only went up like 10% at that time. So I'm trying to keep like, I don't know, like half of maybe a third of my positions uncovered until I get another one of these giant spikes. Let me just read your question again, see if I even answered the damn thing. Not sure what's better. Wait for a better time to sell or just sell when shares are free regardless. Yeah, I'm still holding back. I'm still holding back and I'm waiting. I'm waiting for the big kahuna. Yeah, I kind of missed my little window today when we were trading at like 315-ish. I probably would have closed maybe half of these. I'm definitely closing them by Wednesday before the market closes. I'll probably keep 6 or 7, however many leaps I have, I'll keep on. But between now and Wednesday, I'm probably going to have to come up with about 15 grand to close out some of these because I don't want to hold them over earnings, which may sound weird because I said I didn't expect fireworks over this earnings. but I'm also so unsure about it that I don't wanna have too many positions covered. If all I cared about was the premium, I could probably put on another 15 covered calls just based on how many long calls I have down here. Sorry, these more so than these. But yeah, I'm kind of biding my time and waiting for that big move before I go crazy. And when I do, not only will I be selling more covered calls, but I will be taking off all of these 1080s that are completely underwater. So these have been absolutely destroyed. My Decembers are still in profit. I think these were up at least double at one point. My Januaries are even worse. This is like 75% drawdowns on these positions. 12 grand a pop. And then even these ones that I've only had on for 2 weeks have been kind of decimated. So my July 1080s have also been wrecked, like 66%. So yeah, when Ivy rank is pegged at 100 again, I will be adding in, a dozen covered calls, and I will also be taking off, I don't know, 30 or 40 of my leverage positions. So yes, I will be selling calls to open, covered calls, and I will be buying calls, selling to close some of my long calls that I have open. I'm just biding my time and waiting for the next spike to 550, 750, you know, something amazing. Like that scene from Incredibles where the little kid on the big wheel is watching Mr. Incredible and he's like, "What are you looking at, kid?" And it's like something amazing, I guess. Or what are you waiting for? Does it say what are you waiting for? Yeah. So I'm waiting for something amazing, I guess. Danny says strike in the long run could be a better play because of the $1,000 perpetual long call strike it has that never expires. Yeah, but that $1,000 strike is a moving target because if if strike is still at 100 and MSTR goes to 1,000, then that makes sense to convert 10 to 1. But if strike goes up to 500 and then you convert 10 to 1, you're only going to get like half the value. So strike goes to 500 a share, then MSTR needs to go like 5,000 a share to make that make sense financially, if I have that right. David said, "Yeah, watch the Juice Man." Yeah, he's funny. The algorithm must have like, matched him up to me. It's like, "Oh, take a look at these covered calls selling or whatever." And at first I thought he was kind of a little over the top and I wasn't sure, but like, yeah, he's just trading with no um yeah, he's just trading premiums. He doesn't give a shit about where MicroStrategy goes. Uh and it was fine. It seemed like most of the stuff he was talking about, I couldn't really find a whole lot wrong with it. I just think he hasn't I don't know if he groks Bitcoin and what MicroStrategy is doing. I only watched a couple of his videos, so I'm not sure how much research he does on the companies. Juice Man gives a lot of his premium back when he's wrong. Yeah. But at the same time, it's like, It's just limited upside. Like, he's still profiting. He just might not be profiting as much as he could. Patrick says the minimum floor strike can trade at is probably when the dividend reaches the risk-free rate of treasuries. Yeah, that makes sense. Because why would you buy it if you could just get treasuries for the same rates? Okay, so this means that we can calculate the risk premium that preferred stock traders place on MicroStrategy. Strike dividend 10%, risk-free rate 4.5, risk premium 5.5%. Seems high to me, therefore strike price up. Bitcoin's over 100 again. Super. I missed that dip. Yeah, Howard says I feel you got several June strikes down 90%. Yeah, I really missed it. This should have been an absolute slap in the face, and I know some people did catch on to this and took full advantage, but I just FOMO'd. I'm like, "Okay, the price went to 500, it's going to 1,000," you know what I mean? That was in my head, so I was kind of a little gun shy here, and I think I took about 20% of my leverage off the table, but I should have taken half my leverage off the table, and I should have added like 100% of my ability to carry covered calls at that point, and I definitely missed it. So, I'm watching, and I'm gonna try not to miss the next one. Hopefully, there will be there will be a next one. But yeah, I don't think the Bitcoin run is over for this year, and you know, if we do get a rate cut next time, that's kind of off to the races. So I don't always like, try to pin a date on the catalyst, like, "Oh, okay, we got this catalyst, so something should happen by a certain date." But at some point, I feel like the market's gotta start figuring this shit out. And they're either gonna figure it out ahead of time and start front running it, or it's gonna hit them like a slap in the face and they're gonna have to FOMO into it. Either one of those scenarios will be fine with me, but I'm still as bullish as I've ever been for 2025. So all of this kind of floundering is I think is to be expected. All right, we are all caught up on the chats, so I think we will call it there. Actually, maybe not. I didn't actually do any trading, did I? Let me just double check. Yeah, this isn't really cheap enough to buy back yet. Neither is this one. Neither is this one. Yeah. MSTY, when I checked this morning, was kicking me in the balls. Like, my Misty position, I think, is down 20,000 since I opened this up a couple weeks ago. But I'm like down like 25, 30. Started at 215. I think it was worth 285, 290. Yeah. I'm down like 10 grand more than Misty. Let's just put it that way. All right, the joint account. Yeah, these are not cheap enough to buy back. So nothing for me to do here. This one barely is. I could go ahead and close this one, but I think I might just wait until the last minute and just close this on Wednesday. That way, I only have to sell. Maybe I'll only have to sell 2 shares. to stay out of margin use. This is the account that I'm trading against, MSTY. But what I may do, actually, I may place a trade in this account. Because I could. Nah. If we were still at like 300 a share, I would probably sell 100 shares, buy 2 leaps, and then add another covered call position or 2. But I think I'm okay with this leverage ratio. I don't want to go too crazy at this price, because if MSTR crashes to 250, 275, I want to have some of these shares that I can sell off to buy leverage with. So I'm going to stand pat here. No reason to panic or to FOMO into anything. So let's check the 5K account. I think was I assigned any shares over the weekend? I have 100 shares of Wolf, but I already have my covered call against it, so I don't think there's anything I need to do here. See, oh, no, that's not true. I've got a bunch of cash here. What happened? I think I must have had, yeah. Okay, so I had 700 shares of Riot called away over the weekend. So that's why I have about 8 grand to play with here. So I need to find something to spend 8 grand on. Do I just sell a bunch of miners again, or do something? I've never owned any of the similar positions. So $50 a share. Huh. So the March 21st expiration date is almost perfect. The 45 days to expiration sweet spot. So if I spent 5 grand on this and I sold the 70 or the 75, anywhere between 65 and 75 would probably be decent. The 70 would be $20 in upside. So about 40% call away value. And get paid $220. And if I see, there's no flexibility to roll to the weeklies though. So I wouldn't be able to roll this until March 3rd-ish, and then I would roll it to April. So over the course of 4 weeks, let's just see what the $70 strike is in February. 68 cents. So if I sell it for 228 and it's worth 68, then that means I got to keep what, $1.60? $1.60 over 4 weeks is $40 a week, and I'd have to put up 5,000 in collateral. So 1% would be $50. So a little bit less than 1% a week returns. But that's with 40% call away value. I could go to, let's see, the 60 strike is going to be worth 180. And I could sell it for 410, which would be about $2.50 over 4 weeks. So that's a little bit closer to 1% a week. So, I mean, that's doable. Um, it might actually make more sense. Let me see, what's the implied vol on SMLR right now? I don't think I'm going to do this, but doesn't hurt to look. So implied vol's down since November, December, which makes sense. The Decembers, so I'm just looking to see what it would look like if I set up a poor man's covered call in this. So if I go out to the $40 strike, 0.77 delta, in this scenario, instead of having to put up the $5,000 in collateral, I have to put up the 2,200 in collateral, which more than doubles the weekly return. So this wouldn't be terrible. Something like this. But not having the flexibility to roll out to weeklies is, I don't think I can do this. I don't think that's, mechanically, that's not going to be fun for me to trade. It's going to be annoying. But I got to do something with $7,000. I could set up another poor man's covered call with MicroStrategy. Oops. All right, view all options. I've got, see, it says I have 8,500 in buying power, but really that's, it's closer to 7 because I already have some cash secured puts out there. Yeah, 97 in cash, but 1,500 of that. So that leaves me, 82, 8,200. Actually, I guess that's, yeah, this is about right. This is accurate. So I'd have to be a little bit creative and kind of, what do I already have? I've got the July 300. So if I get another one of these, then that means I would have to sell a covered call for at least 1,500. So like the 450. Let's just see if this makes any sense. So the way that I check to see if a poor man's covered call is quote unquote safe or not. Let me get rid of my dumbass face in the comments. Is taking the short strike, subtract the long strike. That's 450 minus 300 or 150. Add the premium, which would bring us to 167. And that 167 should be more than the value of the long call. So that's fine. I could probably even go down all the way to the like the 400. This would probably be fine. You can kind of like eyeball it, like as long as this down slope is not too steep. Let's do one at the money. This one would definitely not be, yeah, see, you get wrecked. If MSTR goes over 700, you start losing money. So this would be a poor man's covered call, not structured, quote unquote, safely. 400 is probably fine. But what did I say? 450? This would be fine. And if you put all of these values into the poor man's covered call on options profit calculator, I think you'd see that all of this up here was green. This would be fine. So should I do this? If I do, then I only have like a couple of grand for running the miners. I think I'm all right with that. What's the other one that I have on? I have the $500 call on right now. Okay. I'm not sure I even have enough buying power to get this to fill if I have to pay a little bit more for it. All right, let's see how much gravy I have in here. Got 8,500, so let's try to pay 8,300 for it. High fill likelihood. Okay. High fill likelihood my ass. I like insta fills. All right, I'll try to do 83.25. All right, they're really going to put it to me, aren't they? 83.50. Wait, 83.50 is already over the frickin' ask. I should be able to get this filled at 82. 83. All right, so let's try this again. 82.75. So now the bid ask spread has changed for some reason on me. All right. I'm gonna put exactly the ask. See, this should fill, but it ain't gonna. All right, let's go up to 83.50. Get this show on the road. Nope. Okay, there we go. I was hoping if I just let that damn thing marinate a minute, I would get a fill. So that's cool. I just went and started reading chats. Howard says you're down 10K over Misty because you're long. Just think how much you'll be up when the price goes up. Exactly, and that's kind of that was the whole point. Is I just want to be leveraged more than them. Um, and the reason is, as a retail trader, I don't have to follow their strict trading rules or their philosophy, so I can take a little bit more risk. And I don't have the type of research team that they have, but I can be a little bit more agile with my trading. Dr. Tone says, I seem to have horrible luck with Semler. I just seem to buy at the worst times and then sell to pick up MicroStrategy at the wrong times for Semler. Yeah. Yeah. I don't mind selling almost anything to buy MicroStrategy. Like if every dip for MSTR is a buy signal for me. So that's kind of what I ended up doing all through 2024 is I had a bunch of Tesla positions and over time I just couldn't justify holding any of my Tesla with what I was expecting MicroStrategy to do. Um, yeah, I've been trying to look for any kind of excuse to invest in Semler, and I just kind of couldn't, other than just like wanting to support Bitcoin treasury companies. And I guess it does make sense a little bit to diversify into different sectors of the Bitcoin treasury realm, I suppose. Yeah, I like having something that you can rebalance and trade in and out of, but since they're both dependent on Bitcoin, I don't know. It's gotta be hard to, I don't know. I think they've got something in the works, right? Do they have any, they've got some kinda device in the works, I think, don't they? So if they get approval on something like that, I guess that would be an event that could send their price up regardless of Bitcoin or anything else. Yeah, I can see making that argument. And Dr. Tone, do you know anything about their medical device that they're pitching? Like, because of your profession, do you have some insights, or you just like the idea of a medical device company owning Bitcoin? Yeah, Dr. Tone, or buy some Misty and collect dividends with your 8,000. Yeah, I have enough. I have more. I don't want to own any Misty. I don't like paying ETFs, assets under management fee to do what I feel like I can do myself. Um, and not only that, I think Jeff Park's going to have a competitor, a product that comes out in March. He said that is going to be similar to this product. And if that's the case, I haven't even seen the details of it, but I mean, the guy's pretty freaking smart. So I'd probably lean towards that product without even having seen it, just based on what I can see, just the interviews that I've seen him on YouTube and X. But um, we'll see. I may cut bait on MSTY in March once I see that product, and of course I'll cover it on the channel. N said sell CLSK cash secured put. I think I have one. Yeah, I had to go out to 45 days expiration on this one. So I sold the 9.5 for 77, and that is for 228. So I will. How long have I had it open? Only had it open for 2 weeks. I'll probably let this go another week or two before I roll it out for another credit. So we'll see. I got one CLSK position. I've got two Wolf positions. And then this is just pure speculation. I've got a Riot Leaps, which is taking it in the shorts right now. But Patrick says, that's my take. I want to support all of the Bitcoin treasury plays, MSTR, STRK, SMLR, MetaPlanet. We want them all. Nice. It's not FOMO, it's fun of jumping in. Doctor said their old product is pretty good. It's to detect early peripheral vascular disease. Yeah, that's the one that I remember them talking about. Haven't heard of any new products, but I've stopped following them. I did study the original owner, who was a cardiologist, and they do seem to do a lot of good stuff, like for good causes, charities. So I liked their principles. Okay, cool. Yeah, I've come to the conclusion that any company that doesn't adopt Bitcoin is fighting the battle with one arm tied behind their back. And it's going to kind of be like the UFC that exposed not the necessarily fake martial arts. There's definitely fake martial artists, but there are some arts that don't really do sparring at all. It's just all forms, and the demonstrations that they have are just kind of orchestrated, and it's all choreographed. But when you step into the freaking octagon and you're inside the cage, you find out real quick which, like, who knows how to fight. And so all of the companies that adopt Bitcoin are going to have just a huge advantage. It's almost gonna be like they're allowed to use steroids and nobody else isn't, or nobody else is allowed to use steroids, but they can all get pumped up. Um, okay, so now Robinhood is pissed off because I'm high risk margin. Probably because my MSTR position is so much of a large part of it. Let me see if they will get off my back if I close this wolf put for next week. Wait, the put? Yeah. I don't think I should be using any margin. See if this recalibrates. Okay, there we go. Yeah, jerks. So I've got $400 in cash. That's fine. I don't mind having a little bit of cash. So it looks I've got one wolf position and one CLSK position in this account. I could have rolled this $500 call down to 450 and collect a little bit of profit just to get them off my back, but that's fine. And says sold my first contract last week, CLSK CSP 1050, currently in the money. Yeah, the premiums are legit on CLSK, so I'm definitely not against it. All right, cool. We're all caught up, so I think we will call it a day. Be good, y'all.